What's up, YouTube? Welcome back to the channel. Thank you so much for jumping into another episode. My name is Josh, and I am just an average Joe day trader. Guys, for this video, I'm going to do something a little bit different, and we're going to actually add this to our training series. What I want to talk to you guys a little bit about in the video today is earnings. Now, most of you may know that you can obtain the earnings calendar from several websites out there. NASDAQ has an earnings calendar. Yahoo Finance has a way to identify and see when companies are going into earnings. Earnings Whispers is another website that you can go on, sign up, and they'll provide you with the current earnings for the week. And you can look at it by day. You can look at it like a full week calendar. And I'll put an example of that up on the screen right here that I use. But here's the thing about earnings. You're probably thinking, well, what's so important about earnings? Well, number one, you saw the hype, you heard the hype, you probably heard other YouTubers, including myself, talking about earnings for NVIDIA. And you saw that the NVIDIA earnings literally launched the entire market, caused the entire market with the S&P 500, because NVIDIA is a huge part of the S&P 500, caused the entire market to run up. Reverse what happened today on Thursday, May 29th, where the entire market started to run back down. But the point of this video is to teach you how to play earnings. Now, I don't play every company's earnings, meaning I don't buy stocks into every single company that's reporting earnings within that certain day or a specific week. But what I do is I wait to see the earnings result, especially in the morning hours or the ones that report earnings at the bell close, because there's an opportunity for you to get in, to buy shares, to make money, basically snipe stocks immediately following the earnings in order to make some pretty good return on investment. And what I'm going to do is I'm going to show you based on some earnings from this week. And by the time you watch this video, it may not be relevant to this week or not, but earnings for us this week, I'm going to show you specific companies that had earnings and what their results are and where there were opportunities to get in to make some pretty good money. Now, earnings is a very volatile time of the market. I urge you, because this is not financial advice, but my recommendation is to be very cautious if you're going to trade earnings days, because there's a chance that you could get immediately into the play and have it either drop significantly more or drop out, and then you're back to where the stock actually was, which could be a lot lower or a lot higher, which is what you want. You want it a lot higher. So let's just kind of go to the charts and let me show you a little bit about what I'm talking about with that. So here we are first. You see my chart, S&P 500 today and how it ran. And there's going to be another video coming out here later today on how the market conditions were today and what happened in those very specific day trade stocks that I've shared with you guys that we've listed as stocks to get in and out of, recommended for you. Again, not financial advice, but the ones that I day trade every single day. I share that list with you on every one of my videos for the most part. So if you haven't joined, if you haven't subscribed yet, please do hit the subscribe button, but we'll get to that later. Let's first talk about these stocks specific that I want to show you what I'm talking about with earnings. So I'm going to go to U-Haul. Okay. U-Haul is a company that performs pretty consistently across the board here. Okay. I'm in the 30-minute chart. You can see that, there's some up and some down momentum, but $59 here to a high of $67, right? So that's only a $7 swing. And generally, okay, if we go back to the 5-minute chart, you're going to see that within the day, U-Haul runs somewhat relatively flat, okay? And that's primarily U-Haul's thing, is they may have some days they run up, some days they run down. It's not a day trade stock, not even one perhaps for me that's a long-term hold for my portfolio for retirement. But what I want to share with you guys is the earnings result. So I want you to look at this real quick here, and I'm going to try to zoom into this for you, and I'm going to take the auto off so I can actually bring it down. Okay. But here is earnings. Okay. U-Haul reported earnings, and I'm going to go to this candle right here at 4 o'clock when the market closed on the 28th. They were sitting at $62.32 per share. Now, what happened was earnings had an immediate wick up, okay, as if the results were great. and they launched from 62.33 all the way to a wick top of $65. Now, the chances of getting in and getting out, so if you bought shares here, getting in and getting out, making that $2 to $3 per share is challenging, because what's happening is the sellers are still pushing the stock back down in earnings. And as you see here, what I want to show you, you have this red candle that bottomed out and closed at $60.79, followed by a quick green candle, which stayed flat, $60.79, and another red candle, which ran down in that next 5-minute period, all the way down to $58.66. Now, guys, this is all between 4 o'clock bell closes to 4:40, okay, during post-market tradable extended hours. So what would Josh do if he were going to play earnings for U-Haul? Josh would monitor and watch what's happening with this candle and give it that 15, 20, 30, 45 minutes to understand what's happening. You could go to the 1 minute if you want to be a little bit more direct. And you see here on the 1 minute, okay, here's that major wick up to $65 and an immediate drop back, and then your red drop all the way down to $58.66. So as most earnings, okay, and again, not financial advice, just sharing with you what typically happens to any company that has drop down earnings. Within that period of time, whether it's post-market, pre-market, the next day, maybe a couple days, it's going to basically correct itself back to where it was. So for example, this earnings report caused U-Haul to drop to $58.66. But if you look and see what happened immediately following the close of the $58.66 candle, if you were able to buy in within this 5-minute candle, anywhere in here in the $58 range, immediately, if you look here, you're going to see these 3 green dots, which are the next candles, okay? 63.90, 63.90, 63.90, and then it dropped back down, and it came back in pre-market into the next day, basically at 62.99, 63.44. Okay, so I hope you're following what I'm saying here, guys, that the potential was that if you played U-Haul's earnings, you could have gotten in, let's say, at $59 and bought 10 shares of it and made, in that quick period of time, okay, got to get to it. It's hard to touch the candle, 63.90. So let's say you got in at 59 and you got out at 63, okay, $4 per share. If you were going in kind of cheap and bought 10 shares or 20 shares, okay, $40, $80, okay, so you bought 100 shares, right? $4 a share, $400. You guys following what I'm saying? Okay, that's U-Haul. Let's go look at another example. Another example is one that my wife loves, and that's Elf Beauty, ELF. Okay, Elf also had earnings. Let me find where their earnings are. Let's go back to the 30-minute. Okay, you can't miss it on the 30-minute. All right, Elf also did the same thing, guys. Okay, Elf at market close right here is 3:30 p.m. This is on a 30-minute candle. Okay, 4 p.m. market close, candle drops down, opened up at 92.59, closed at 90.50. Next candle, red, opened at 90.50, closed at $85.37 with a low of 76.87, and into a green candle, low $83. So you had a chance here with a low wick of 76.87, somewhere in this candle, okay, from $92 to $76, guys. And look exactly what the market did to ELF, okay, Elf Beauty. If you don't know it, it's a very popular beauty company. Closed today at $111 per share. You could have bought in and let's say $80 per share. Even at $80 per share, you got back in, and now you let this run up in the post market, okay? And even if you said, hey, I got in the post market, I'm going to let it run up a little bit, and then you get to here, okay, at, basically 6:30 p.m. and you sell out here on this candle at $92, okay? I'm not an expert, guys, but $80 to $92 is 12 bucks. Let's say you bought 10 shares, 12 times 10, okay? Pretty good money, guys, all right? So that's another one. ELF was another one that had earnings. Let's look at another example. Marvel, MRVL. This is a hot company right now, man. Lots of people trading in and out of MRVL, and it's, it was doing pretty good today. What you're looking at, it was a horrible crash day for many of the stocks that we trade. Had earnings today. Okay, we're on the 5-minute candle. Okay, market closes 4 p.m. 4:05, still on a nice green candle. Okay, 4:10, earnings are announced. Candle opened at 64.30 and wicked all the way to 59.08. Okay, so guess within this 5-minute time frame, you could have bought in towards the bottom, let's say 60 bucks, and it ran all the way back up to $64.87. Let's say $4.50 per share. Are you guys tracking with me? You're following me? This is how you play earnings. Now, I'm just going to tell you guys right now, earnings are dangerous. This is not financial advice. You have to know what you're doing. You have to be careful. But what I want you to understand is that most stocks that you basically play earnings, that have a negative earnings result, are going to come back to the level where it started. Now, not always right away, not always within 5 minutes. Sometimes it could run through the post-market into pre-market the next day and then run up. But generally, when they have bad earnings, people sell off like crazy. And then guys like me, and hopefully like you, are buying in like crazy to push it back up. And then we snipe it and sell out. Let's look at one more. NGL, guys. Has nothing to do with tech. Has nothing to do with NVIDIA. Has nothing to do with hotels and cruise lines. This is an energy partner, okay? NGL Energy is an energy partner. It's a utility type of a stock, okay? NGL had earnings announced at close, at the point we went to close, 4 o'clock. And although it was already having kind of a rough day down, okay, I mean, with the market, it already had kind of a day where it ran sort of horizontal and then it dropped down. But in the earnings report, it opened up at 4 p.m., 329, dropped to 310. And then what did it do right away, guys? Boom, green mark, 322, green mark, 329, green candle mark, 345. So you could have made 30 plus cents per share just on playing that earnings right there. Now, this is one that's pretty volatile, so you'd have to be careful, know what you're doing. But at $3.10, you could buy 1,000 shares for 3,100 bucks and walked away with 3,500 bucks or $3,400. Okay. So anyway, guys, this is how you play earnings. I hope this information was good for you. I hope that it helps you. Do your own research, do your own homework. This is not financial advice. Don't just go run and jump and start buying, shares into earnings. Research the companies, number one. Make sure that they're good, solid companies, so you know that the potential for them to rebound quickly is there. And do that research, that, do your own diligence, guys. If you haven't subscribed to the channel yet, please subscribe, hit the like button, hit that notification bell so you'll be notified every time I upload a new video. It's been a pleasure to create this one for you. We're putting this one in our training playlist. Guys, thanks so much for jumping into this video. We will see you at the next one. Josh out. Peace.